All right, welcome back to the show, everybody. We got another good one for you today. Let's start with this. We got Mark Cuban chimes in on crypto. Charles Hoskinson's plans on eating Apple's lunch, and tick-tock, the deadline for Tether is coming. Polysign files a Form D. We'll get into that. And the LiborSOFR. Let's talk about what that is. And by the way, how does any of this make us rich? Let's just roll that beautiful intro and get into this.
This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
Welcome back to the show. You can follow me on Twitter at @BackupBradleyAbove at the top of the screen, and everything that we're talking about here. We got a lot to unpack. Let's see if we can move through it very quick and tight to keep the video tight today. Okay, Mark Cuban watching the crypto trade. It's exactly like when the internet stock bubble. Exactly, he says. I think BTC, ETH, a few others will be analogous to those that were built during the dot-com era, survived the bubble bursting, and thrived like Amazon, eBay, and Priceline. Many won't. Along the way, many fortunes will be made and lost, and we will find out who has the stomach to hold or hodl and who doesn't. My advice, learn how to hedge. Yeah. And then he says, as during the dot-com bubble, the experts try to justify whatever pricing of the day is. Crypto, much like gold, is a supply and demand driven. All the narratives about debasement, fiat, etc. are just sales pitches. The biggest sales pitch is scarcity versus demand. That's it. Wow. Go Mark Cuban. So that's the moment we're in as far as Mark Cuban's concerned. And it looks a lot like that to me. You guys know I've not been shy about it. I believe this is absolutely a time that is analogous to the early days of the internet. I mean, we are rolling out a new financial system, hashtag the internet of value. This comes from Michael Val 5 links. Charles Hoskinson's plans to build an open protocol that will eat Apple's lunch. I encourage any of you to find the video that Charles Hoskins or anything he's done on the recent banning of people from social platforms like Twitter and Apple and YouTube and places like that. And I would encourage you to listen to the things that he has said. And honestly, it is probably some of the most grounded, well thought out comments and perspective on what we've seen happen in the recent weeks here. Make sure you check that out, and shout out to Charles Hoskinson. Okay, now looking at this, the deadline for Tether to submit the documents requested by New York prosecutor's office expires January 15, 2021. That is this Friday. In fact, the main worry is that the evidence will come to light that Tether created large amounts of USDT out of thin air. We will see. If so, I think it could be quite crippling to the entire crypto space to move through this case should that come to light. We will keep an eye on that as we move forward. Here is some breaking news here. Polysign. Yeah, Polysign fills out a Form D. What is a Form D? What is it? Well, let's pull it up because I got the notification from the SEC this morning or overnight. And basically the Form D is looking like here that it's been filled out that they're selling some equity in the company. So here we look down here where I have it. And yes, here we are. You see equity type of security offered. It says equity, right? And then down here you see the total offering amount, 12.7. And you see down here total amount sold, 7.7. And then total remaining is 5 million. So looking at that, it doesn't appear that it's anything other than that, and that's what we're looking at. It's something we got to report. Just a little more clarity here. You must file a Form D within 15 days of beginning to sell securities. Qualifying for an exemption under Regulation D isn't enough if you don't file on time. Your first sale only occurs when an investor is completely under contract to provide funding. This timeline refers to 15 business days. Form D is an SEC filing form to be used to file a notice of an exempt offering of securities under Regulation D of the U.S. Securities Exchange Commission. Privately held companies, which Polysign is, that raise capital are required to file a Form D with the SEC to declare exempt offering of those securities. Just keeping everybody informed on that. We need to pay attention to what's going on in the space, and this is how you do it. Here, we also know that some of the other common exemptions for registering requirements for a Form D is a private offering to a limited number of persons or institutions, which it appears that is what is happening here. Offering or limited size, interstate offerings, and the last one's interesting, securities of municipal, state, and federal governments. That's interesting to note. So, but it does appear that it's a private equity offering here, and they are a private company. So, all right. So now here's some more SEC news, and we've covered this before about the LIBOR and the SOFR rate. It says here the SEC last Friday, staff from our Office of Municipal Securities issued a statement on the LIBOR transition in the municipal securities market, in the government securities market. Now, we drill down on this and we see this is the paper. What I want to highlight here is a couple things before we get into it. First of all, LIBOR rate is the London Interbank Offer Rate. It's what's been used for many, many years. It's compiled of, it's more of an estimation and data collection process. And LIBOR actually has 35 different rates that they offer. Moving and transitioning to the SOFR rate is what's taking place. We are in the middle of a transition of letting the LIBOR rate go and adopting the SOFR rate, which is the SOFR rate, which is secured overnight finance rate. That means it's the information that is collected is really a feed backed by treasury bonds. Is a virtually risk-free rate, and it is one rate. It's not a bunch of different rates, and it's published based on overnight loans of those T-bonds, right? So it's the cost of borrowing cash overnight in the wholesale market, basically. And it's collateralized by treasury securities. So that, I just want to clear that up. Now, understanding that we are moving from that old LIBOR style to a secured overnight finance rate, the SOFR rate, knowing that that is less of an estimation and people's opinions, this is coming down to just strict data off of real T-bonds and what the rate currently is. I do speculate, could this have something to do with maybe XRP settling these T-bonds back in, or these things being tracked and the price indices fed through the XRP ledger? I mean, I don't know. I'm speculating on that, but I think it's important we pay attention to this, because if you understand XRP, you understand that its real full-scale intended use is wholesale back end. Don't believe that. It's still true. And before we get out of here today, I'm going to play you a clip, and you can listen to somebody that worked at Ripple tell you the same thing. And right here we see, for instance, the LIBOR rate represents unsecured loans, while the SOFR representing loans backed by Treasury T-bonds, as I just explained to you, just to show you the information is there. The secured overnight financing rate, SOFR, is a broad measure of cost borrowing cash overnight collateralized by Treasury securities. So there's the information. But now moving here, couple the fact that we're switching from this LIBOR rate, the lending, the money. We've heard people like the IMF talk about debasement, and all respect, hats off to Mark Cuban. The IMF talked about debasement of the US dollar and other dominant currencies. I'm not going to blow that off as a sales pitch. So, and I tell you what else, I wouldn't blow it off as a sales pitch either, because Russia, for the first time in recorded history, is now holding more gold than it is US dollars. There's something, there is a there, okay? Now, how all of this plays out to our good fortune or not is unknown as of yet. However, this is important information, I believe, for all of us to pay attention to until we can say we can rule that out. Until now, we can't rule it out. Everything's on the table. We need to pay attention to as many things that we feel could have some sort of impact, either directly or indirectly, on our investment. These things are important today. Now, about tomorrow, we'll let you know. Right now, this is important today too. Ripple partner SBI Remit teams up with major Japanese bank to use nearly 14,000 of its ATMs. Come on in. Yeah. And we move forward here. This is from 432 and Michael Val 5 links here. And they show in this, the printout of this, the goal SBI Remit to look to become the best payment service provider for foreigners living in Japan. And the solution is SBI Remit and SCB are both using Ripple's enterprise blockchain solution to enable instant remittance services. Now that is something else. Thank you to 432 XRP and Michael Val 5 links for that one. And this is a reminder for us to finish on a real nice high note here. This is Dilip Rao you're about to hear speak on this. And Dilip Rao is going to tell you exactly what I just told you. And don't listen to me when I say it, but you may want to listen to Dilip Rao when he was at his time at Ripple and listen to what he says about the real intended use of XRP.
So I mean, it's kind of chicken and egg. You have to create a marketplace. And right now, we have about 150, 200 exchanges around the world that trade in XRP. A lot of it, as you say, is very shallow trading by individuals. And that is not the use case that we are pursuing.
That is not the use case that we are pursuing. So the fact that you and I are in the market should consider ourselves lucky, because the reality is the reason that there is a retail market is to prove to the large people who need to bring the volume and utility to the network to truly move price and keep it there on the daily. They are the real target here. And Ripple had to prove to them that this was an open, free market on this asset, and the only way to do it was to include us. But that is about to change.
What we're pursuing is the use of XRP as a financial asset by sophisticated institutions as a bridging mechanism. So does this hurt or harm? Well, it creates a lot of noise. And, we certainly don't want that much noise, but we're waiting. And for example, this last quarter, the bulk of XRP sales were to institutional investors. And as this transitions away from retail to institutions who will start to use it for wholesale financial usage, that's when the turning point will come.
Got it.
And that's when the turning point will come. And I believe that is why we were in the middle of a lawsuit with the SEC right now, is so we can get that legal precedent set on what the asset is seen, how it is seen here in the United States. And regardless of what they call it, I encourage you to understand the United States is not shooting their golden goose in the foot. The rest of the world sees XRP as money. And no matter what they call it here, I believe however it ends up, they allow XRP to work at its full-scale intended use to serve the wholesale market of the big financial players of the world. That's going to do it for me. Hit the like and subscribe. Leave a comment below. Make sure you share with somebody you know and hit that notification bell so you don't miss a thing. Check out all the links in the description box and the comment section. There are really great deals in there for you guys and products and services that you're probably just looking for and need anyway. And they are trusted, vetted links. I'll catch you on the next one.